All right, let's dive right in. Today, we are cracking a code, a mystery that's shaking up the entire global gold market. We're talking secret missions, a massive shift in world power, and one single jaw-dropping number that could change absolutely everything. And this is that number, $4,900. Now, you might see that and think, okay, another wild price prediction. But what if I told you this isn't just a prediction? What if it's a clue, a breadcrumb leading us to something so much bigger that's happening right under our noses? So, the big question is, can that number actually happen? Is it even in the realm of possibility? Well, all the evidence we're seeing suggests this has nothing to do with day traders or short-term hype. This is about a fundamental rewiring of the entire global financial system. And the US dollar's long reign? It's right in the crosshairs. Okay, so let's start our investigation right here. If the price of gold is really a clue, a sign of a massive power shift, then who's pulling the strings?
Well, our first group of suspects, it's the big ones, the world's central banks. Honestly, their fingerprints are all over this thing, and what they've been doing recently is a massive piece of the puzzle.
And when I say massive, I mean it. For the last 3 years straight, central banks have been on an absolute buying frenzy, scooping up, on average, 1,000 tons of gold per year. To give you some perspective, that's like them buying up 1/3 of all the new gold mined in the entire world. This is not just diversifying. No way. This is a 5-alarm signal.
So why the mad dash for gold? It's actually pretty simple. They are losing faith in the US dollar. They see the mountain of US debt getting bigger and bigger, and they're getting nervous. So what are they doing? They're building a financial lifeboat, swapping out paper promises for the one thing that's been a safe harbor for thousands of years, physical gold. But you know, among all these big players, there's one that really stands out, a potential mastermind with the power and the motive to completely change the game, and that's China. And while they've been pretty quiet about it, their actions are speaking very, very loudly. Just take a look at this chart. It's kind of crazy. For a global superpower, you'd think China would be stacked with gold. But nope, only about 8% of their reserves are in gold. Now compare that to a country like Russia, which is sitting at around 20%. That huge gap you see, that's not just a number on a chart. That is a ticking time bomb of future demand.
So let's do the math. What would it take for China to catch up, to get to Russia's level? The answer is, frankly, it's staggering. 4,000 tons of gold. Let that sink in for a second. 4,000 tons. If there's one number you remember from our investigation today, it's this one.
Okay, so China has this secret mission, right? To get their hands on 4,000 tons of gold. But that leads to a huge, glaring question. In a world where you can't just print more gold, where is all of that going to come from? This is what we're calling the impossible equation. Let's break it down. Every year, mines around the world pull up about 3,200 tons of new gold. But here's the kicker. That supply is already called for. You've got about 1,000 tons going to consumers in China, another 1,000 to consumers in India, and that last 1,000 or so gets snapped up by all the other central banks. You do the math. There's basically nothing left over. And that right there is the heart of the problem. All the new gold that comes out of the ground is already gone. And remember, that's before China even really starts its 4,000-ton shopping spree. This isn't just a supply squeeze we're talking about. This is the setup for a potential feeding frenzy. But you know, this whole thing is about so much more than supply and demand. What we're really seeing is a historic shift in global power. The world's financial center of gravity is literally moving from the west to the east, and gold is right at the epicenter of this earthquake.
And if you need more proof, just follow the physical metal. It tells you the whole story. Right now, an incredible 70% of all the physical gold being traded is flowing east to Asia. That's not a trickle, that's a tidal wave. The financial map of the world is being redrawn as we speak.
And this isn't some abstract idea. We're seeing it in real time. The old traditional centers of the gold world, London, New York, Switzerland, they're losing their grip, and new hubs are popping up in places like Dubai and all across Asia. It's simple, really. Power follows the gold, and right now, the gold is flowing east. Okay, but here's the real bombshell. China has just opened a gold custodian center in Saudi Arabia, the absolute heart of the global oil market. For 50 years, the petrodollar system has been the bedrock of America's financial dominance, forcing the world to buy oil with US dollars. Well, by setting up this hub, China is creating a direct path to trade oil for their own currency, the yuan, or even for gold itself. They are taking a sledgehammer to the foundation of the petrodollar. This is a geopolitical earthquake.
So, let's recap the evidence. We have central banks scrambling for a lifeboat. We have China on a massive, secret buying mission. We have a global supply that's stretched to the breaking point and a huge geopolitical power shift underway. So, what's the final verdict for the price of gold?
Well, based on everything we've seen, getting to 4,500 ounces an ounce over the next year or two, that actually seems like a pretty conservative base case. But what happens if there's a shock to the system, a new conflict, a major financial crisis? In that kind of breakout scenario, that's when we could see the price launch towards that headline number, $4,900.
Now, I know what some of you are probably thinking. This all sounds a little too good to be true. It sounds like a one-way street. So what about the downside? What if this whole thing is a bubble? Is there any kind of safety net here?
And the answer is yes, there absolutely is a safety net. And it's built right into the physics and economics of gold itself, the cost of mining. This is the all-in bottom-line cost, everything from labor and fuel to equipment to pull one single ounce of gold out of the ground. And it creates a natural, powerful price floor.
Right now, that global average cost to mine 1 ounce of gold is about $1,400. And that's not just some random number. It's a hard economic reality, and it acts as a very strong foundation for the price. Here's why. The logic here is just really simple economics. If the price of gold were to fall below what it costs to mine it, miners would just stop mining. It wouldn't make sense. And when that happens, the supply of new gold on the market dries up. That creates a shortage, and the shortage naturally forces the price right back up. It's a beautiful self-correcting system.
So, what's the final verdict from our investigation? Well, our suspects, the world's central banks, are clearly running from the dollar. Our mastermind, China, has a multi-year, multi-thousand-ton mission. The physical evidence, a global supply squeeze, is undeniable. The conclusion here is pretty clear. The fundamental forces pushing gold higher are powerful, they are deep-seated, and they look like they're here to stay. And all of this leaves us with one final, really profound question to think about. As the world pivots away from paper assets, things that can literally be created out of thin air, and rushes back towards hard assets that are real and finite, are we on the edge of something historic? Are we about to watch the very definition of what we call money change forever? Now that is a question worth pondering.